at 20% or more. So that's how they will balance it out.
Got it. Okay. And just a last question from my side. This is a bit on a qualitative side. So, we have recently seen World Vehicle Financing Company witnessing a large fraud of roughly 1.8 billion. So now, given the merged entity, will be having one of the largest distribution network physically on the NBFC space with more than 3,000 branches, more than 70,000 odd employees. So how will ensure that, no such events happening at Shriram?
We have a robust internal audit department, and there are also controls and checks and balances at various levels. And we are confident that the frauds of a very big nature will not occur. So here and there, smaller frauds keep happening, the customer-related fraud, but it's restricted to say 1 or 2 crores, but nothing significant will be. At least we have the confidence in our audit and the control mechanisms.
So, would you like to give some, let's say, 2-3 important points to highlight, let's say, how frequently we do the audit, or do we have a external audit structure, etc.?
So we have around 150 odd member internal audit team who visits around 2,300 branches. That is the audit plan for the year 24-25. And to support this, we also have a 200 member operation audit team who also parallelly visit all the branches and then ensure that no fraud as such happens. They have market intelligence also.
Okay. That's it from my side, sir. Thank you and best of luck.
Thank you. The next question is from the line of Adarsh Parasrampuria from Enam Holdings. Please go ahead.
Hello. Yeah, congrats and good numbers, sir. Sir, since you mentioned that the focus will be on profitability, can you kind of indicate what kind of ROEs you expect? You are at 16% this year. You've created a lot of buffers and provisions. So any ROEs that you would target over FY25 and 26?
See, we have given guidance of 16 to 18 as the range, and we are already at 16 plus. I think by next year this financial year we should be able to cross 17. So that is the target, and definitely by 26 will be 18.
Got it, sir. And so the other question was on the housing subsidiary. The subsidiary has grown well, profitability is strong. A lot of media articles we hear, and you have indicated that probably by the end of this quarter, you all can speak a little bit more about what kind of plans you have for that subsidiary. So if you can just talk about that.
Our housing subsidiary is growing very fast, and we need to add a capital to that for further growth. So the entire thinking is on providing the growth capital. So we are looking at various options of providing the growth capital. So the discussion internally is on. Status quo remains. There's nothing decided on that.
Okay, but you would want to just get growth capital, which means that you wouldn't look to, like media articles talk about a lock, stock, barrel sale. So is that option also one of the options, or you would not?
All the options are open.
Got it, sir. Thanks for this. I'm done.
Thank you. The next question is from the line of Meghna Luthra from InCred Equities. Please go ahead.
Yeah, hi. Thank you. So I just have 2 questions. One is that since two-wheeler sales have been good, the book has still been slow in terms of growth. And the second question is a bookkeeping question. I just wanted a breakup of disbursements according to the segment.
See, two-wheeler disbursements have definitely grown, but as you know, it's a 20-month product. if you look at it year-on-year, there is a 42% growth on disbursement. Sorry, 14% growth on disbursement. So even the number of units also have grown.
Okay.
AUM wouldn't have grown significantly because of the tenor being so the churn is higher there.
Okay. And so can I please have the breakup of disbursement?
Yeah. CV, we have done 15,425 crores.
Okay.
Passenger vehicle, 6,706 crores.
Q4.
For Q4. This I am calling out for Q4.
Yeah.
Construction equipment, 2,354. Farm equipment, 894. MSME, 6,372. Two-wheeler, 2,602. Gold, 3,249. Personal loans, 1,722. Totaling to 39,326.
Okay. Thank you. That's it from my side.
Thank you. The next question is from the line of Shweta Daptardar from Elara Capital. Please go ahead.
Thank you, sir, for the opportunity. So I might be harping on growth all over again, but then we do understand that the near-term election-driven phenomenon would anchor the growth prospects. But say 1 year down the line, say as we move towards FY26, and also given the fact that you mentioned in the beginning that the growth will be more coming from lower yielding products, which today also are potentially or have potential to grow at 30% rate, then why still our growth targets remain around 15-16%? So what is the expectation, say, 2 years down the line?
I think already explained, we would like to have a more granular growth of, we'll be focusing on our niche area of small ticket lending, where high yielding assets will be given a little higher weightage. And we are already a large base, and the growth will be calibrated, and we'll be focusing on improving the bottom line. So the entire focus is to bring efficiency and profitability, not the top line growth.
So secondly, on the credit quality, so in terms of stage 3 and so also similar trends in stage 2, so we have seen drastic improvement there, which wherein even our credit cost guidance of 2% is coming. So do you see further improvement in GNPAs or stage 3 going forward, given that your credit cost guidance is expected to drastically, the credit cost which you are guiding is expected to drastically come down to 2% odd levels from 2.3, 2.4?
Our target is, as the economy improves and our target of stage 3 is, we are at 5.45 now. We will be moving towards 5% by the end of the financial year. So that is the target we have, and net will be around 2.5. And credit cost, by and large, will remain on similar line, maybe around 10 basis point plus or minus.
That helps, sir. Thank you.
Thank you. The next question is from the line of Chandrasekhar Sridhar from Fidelity International. Please go ahead.
Hi, good evening. I have a few questions. One for Parag, you sort of mentioned that interest cost would be largely flat. I do notice though you have increased FD rates, recently. So just and given that it's a reasonable chunk of your borrowing, maybe just some thoughts on how does it result in interest costs being constant? Second, another question for Sundar, maybe you could just share the write-off number for the quarter, and then for Umesh, if you thoughts are on price versus volume in the CV segment, how has been that this year? How do we see that moving into the next couple of years in terms of the CV business? And because at some point in time, the BS6 vehicles will start coming into our portfolio. which would result in some level of, step up in pricing. So just curious to see why you are still guiding for 11%-12%, only because my understanding is that BS6 eventually start getting into our portfolio by the latter half of this year.
I think, what you're saying is right. We have increased our deposit rate by not very significantly, only 5 to 10 basis points what we have increased. And only in one bucket we have increased by around 15 basis points, 20 basis points. But overall, that deposit portfolio, until it substantially goes up, then only there can be an increase in cost. Otherwise, it is only on the incremental borrowing that rate is applicable and not on the existing book. So that is one part. On the other pieces, which is largely the domestic borrowing, that is what we are focusing upon now. We have done large ECB borrowing in the January to March quarter. We don't foresee substantially going to the offshore market again for a further raise. So domestic rates are holding up. There is no increase there. That is the reason I am saying that cost may not go up substantially. It may be a few basis points here there can be there, but I don't foresee any substantial increase in cost.
And on the breakup of trade cost for the quarter, bad debts which was written off was 805 crores, and the incremental provisioning was 456 crores, totaling to 126 crores.
Yeah. Coming to CV, see, used vehicle price increase was witnessed in the last financial year. Around 25% of the there was an increase of around 25% for all the used vehicles. Whether it is BS2 or BS6, we could get repriced almost on similar rate, in the sense depending upon the vintage, the price is going up because of the new vehicle price goes up. So this increase is already been has come into the factor, in the sense we have guided 12%. Actually, we have grown 14.6% on CV in this financial year. Going forward, you are right. The prices of used vehicle will remain strong and further up. Therefore, there is a scope for us to increase our used vehicle portfolio. The supply of used vehicle right now is restricted because the new vehicle sale was less in the 4 years back or 5 years back. So from 2019 to 22, the sale of new vehicle was depressed. So there are not enough supply per se. And the current new vehicle, that is last year's and this year's new vehicle, will be available in the market maybe a couple of years from now. That means there will be a robust supply of used vehicle for next 4 to 5 years. That's what we feel confident that our CV portfolio will keep growing, but at a steady pace, maybe between 12 to 15%. It will be growing very steadily, but there may not be a big increase or big numbers in the immediate future. It will happen over the next 3 to 5 years.
Is it safe to say that the volumes actually were down this year? Basically, the growth is largely price driven then? Because if you're saying there's been a 25% increase in price over the last couple of years, it means that bulk of the AUM growth is essentially this pricing which is coming out of vehicles.
It is around 5% factor. If I say our 15% growth, 5% is due to the price increase, and 10% is due to the new addition.
Right. Okay. Then a couple of projects, personal loans, we've seen a pretty reasonable sequential decline. Your thoughts around that? And then lastly, on OPEX, obviously the last year and a half, we've been adding people to the franchise, but the sort of rate of employee addition is now slowed down a little bit. How should we just think of employee addition OPEX over the next year or two?
I think, hi Chandra, this is Chakravarti here. I think on the employee side, you will see that slowdown. We won't be adding much. Probably we'll be adding people where when people are leaving, we need to, when people are on notice period, we will be picking up some people. So basically we are created a small bench. So that will continue. Small recruitment will continue, but nothing substantial will be added. One. On your personal loan, yeah, we actually, so it's not, we just tightened our norms and slowed down the business because of the concerns that the market is expressing over it, though we are pretty confident about the portfolio quality.
Okay. Got it. Great. Thank you so much. All the best.
Thank you.
Thank you. I now hand the conference over to Mr. Umesh G. Revankar for closing comments.
Thank you. Thank you for joining this call. And this quarter has been one of the best quarter for us in stability, improvement in asset quality, and growth. Even though their growth may be a little slow in the first quarter of this financial year, with the IMD prediction being positive on monsoon, IMD and SkyMet, we expect good demand that will come from the rural area in the second quarter. And expecting that, I think the first half of the year, we should be able to see very steady growth. And with the new government coming in and a lot of new projects may be announced and also will give impetus to existing infrastructure projects. All in all, next quarter when we meet, we'll have a lot of good things to talk about and a good performance. Thank you very much.
Thank you. On behalf of Shriram Finance Limited, that concludes the conference call. Thank you for joining us. You may now disconnect your lines.